Hello, today is Wednesday, the 5th day of June 2013. My name's Derek. Welcome to the Silver Analysis video. Daily chart. Still, it's been an eternity, for the most part, that it has really even been above this 18 average of highs. It has been an eternity since it's been rising. You can see it's a down move in here, sideways, down, 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 maybe getting sideways now. After all, it's been a sideways market, to say the least. Well, let's just count them. How many days has it been within the entire band, starting, well, this red candle in there? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 9 days. Tomorrow will be day numero 10. It's not uncommon to see this sort of thing. And like I was saying on the weekend, it's a decent size level as far as this 22 figure is concerned. Shortening it out again from the break below 25. So we're going to do now, and we'll use the 9-hour chart to show this. So that's breaking below 25. The second it went below it, it never went back above it, which was kind of interesting. I didn't think it would hold for more than about a day or so below it. Obviously way wrong. It's been a couple of months almost, and well, this is really the start of the physical disconnect, which to small levels has been playing out. But you also got to look at this from a point of view of there's a very small percentage of people within the world, at least the civilizations of North America, most of Europe, Australia, Brazil, most of the nations, that are saying to themselves, okay, I do not like a fiat currency. I know it's corrupt. The whole system is wrong. That kind of ordeal, and thus getting into gold and silver. Those amount of people are very, very low, which is another good reason why they can do this sort of thing. But anyway, as far as the chart is concerned, after the move lower, you can see that it did this sideways action. At the time, it managed to find support where it once found resistance, and then on the break below support, straight down. Since that last down move, an immediate move from 20 and low change back over 23. That's a gain of over 10% in about a day. And the Fibonacci level of 61.8% from this high and that low down here, well, that's 2297. For the move to be a failure, from point A, which is up at this high, to point B at this low, it needs to hold and stay above this significant level for a decent amount of time. It has not even stayed above it. It has broken above it on 3 occasions. Number 1, test 1, it failed. So now it's got to have a support test. We'll say this is a key support area, which it pretty much is. And well, every single support test is passed. And then you fail here on test number 2. And then you're successful on support. Test number 3, fail again. Test number 4, which was an exact hit of 2297. That's 4 times resistance has been tested within this significant level. And normally when that's the case, and you're in an area where you're making higher lows, and well, all but this one was a lower low. But when you're making these higher lows, that's usually a bullish scenario. And it might end up being such. But until their buyers can get in some sort of control within this market, then I'm going to say it's going to bounce at some point to a significant level, that is. And I don't know if when is now. And that's really the bottom line within it. You can look at this running average from the top. It's also stating, well, there's nothing stating that this selling has failed as of yet. But that's why breaking below 22 and staying below there is a sure sign to at least have a test of low 20s. And when I say sure sign, not just high probability odds or the chances are large for such a manner to occur. And you're looking at this in the short term, you need to see this for a bullish, that is, you need to see this break above it and either have an a fast move up to 25, or B, you want to see this area be held as support, and then whichever resistance it originally establishes to be taking that level out. And that's the minimum that you would need. But when it really comes down to it, what I need to see occur is I need to see it stay above the lowest level, that is, to stay above this 18 average of highs, which is, of course, in a rising average, and to do it for a couple days in a row. Again, it has only once within this chart even managed to have it go sideways, let alone even attempting to break out of this towards the upside. The final chart that we're going to put in is the indicator. I'm just going to call it my silver indicator. If you are not familiar within this, all I can say is do a search on YouTube for Endless Mountain, silver indicator, highs and lows, something like that. It's been a few months since I've been putting this into play. Whenever this is in the negatives, it is considered to be oversold, thus a great buying opportunity. And the more lower it is, the greater the buy. When it's higher, that means you can say it's overbought and thus great selling opportunities. And, well, it's been in negative territory. This is like right around here. But February the 4th was the last day that this thing was in the positive numbers. So it's been in a very large price correction for both the intensity of the price and for how long it's been. Again, you're looking at this type of chart movement. It's just a boring chart right now, which is why this will probably be my only weekly video for silver until the weekend. Of course, the message of the market will decide that as we move on, but thank you for tuning in. Bye-bye.